What private company will be the first to a $1 trillion valuation? Why is this even possible, and why are we talking about it now? In today's episode, I'll give you my list of the top 5 potential Teracorns, or $1 trillion startups. In IPO Radar news, AI talent competition heats up, and Cerebras is overtly diversifying its business. Welcome to the Access IPOs podcast, where we explore opportunities to invest in the world's most innovative and disruptive pre-IPO companies. I'm Craig Stevens, founder of AccessIPOs.com. Came across an article from The Economist, and it's called Silicon Valley is Racing to Build the First $1 Trillion Unicorn. What could possibly go wrong? The article talks about why this is happening, why VCs are putting all their money into private companies, and why the valuations are inflating so much. But they don't name names in the article. They do mention one of the names, and I'll talk about that one first. But this is more about what's happening in VC and combined with what's going on in the public markets. And they cite NVIDIA. NVIDIA became a $1 trillion company just 2 years ago. And this week or this month in July 2025, it hit a $4 trillion valuation. So you could have had a 4x increase in your investment just in the last 2 years if you'd bought NVIDIA. And the same hype that's driving that stock, that public company, is driving private valuations as well. And it's time to start talking about which of these private companies will become a $1 trillion private company before going public. Unicorns are $1 billion companies. Decacorns are $10 billion companies. Hectacorn is a $100 billion startup. I put those phrases into some AI chatbots, and it came back with Teracorn. Tera is the prefix for trillion, following the same naming convention. So I'm going to go with Teracorn. So after reading this article and just having watched the news over the past few weeks and these valuations that are just surging, and even The Economist is calling them unhinged, I thought it'd be fun to put together my own list of companies that are on the path toward that $1 trillion valuation without even becoming public companies. So as of summer 2025, when I'm recording this, there are only 10 public companies that are $1 trillion companies. NVIDIA tops the list right now. Then we have Microsoft, Apple, Amazon, Google, Alphabet, Meta, that's Facebook, Broadcom, Tesla, and Berkshire Hathaway. And technically, Google's in there twice, or Alphabet's in there twice because of its ticker symbol. JP Morgan, Walmart, Oracle are also growing in valuation. I saw an article about JP Morgan becoming the first $1 trillion bank. Hasn't happened yet, but it could be happening. So to reach a level of $1 trillion valuation would be extraordinary. There's only 10 or so US listed companies that have done it. And to do this as a private company would be really challenging, but there are some candidates that are moving in that direction. So it's time to start preparing for that to happen. Now, why is this even possible right now? Well, of course, companies are staying private longer. And since they're doing that, they're not in the public markets, and institutional investors and even individual investors and wealthy investors now are trying to find opportunities to invest in these pre-IPO companies. And that's what we talk about. How do we do that? How do we access these companies in our portfolios, even though they're not public? So since they're staying private, there's lots of money in this venture capital world because that's where investors, wealthy investors, want to put their money, and they're trusting their money to the large venture capital firms and trying to get their money into these private companies in their growth phases. Technology is making this easier too, with the rise of special purpose vehicles, and that's a legal entity, but there's some technology behind that making it really easy for smaller firms to spin up an SPV and use that to invest in a private company, and then individual investors can get a piece of that SPV. And there's more liquidity in the private markets, and that's allowing employees to sell their shares without an IPO. So private markets are more liquid and more fluid. There's more price elasticity. So you do see the valuations of these companies go up and down, and mostly up for a lot of these AI companies. And that's the last reason why I think this is happening now, is that AI is this generational technology. AI is in a hype cycle and it's still in a growth phase. There's some indications that parts of the AI world are kind of hit their peak and are falling down, but the valuations of these companies keep going up. There's lots of potential in AI, but still a lot of unknowns. So lots of factors feeding why this is even possible right now for a private company to be worth $1 trillion. It hasn't happened yet, but the way things are moving, it could happen within the next few years or so. So we're going to be keeping an eye on lots of these companies, but I'm going to pick out the top 5 today that I think could be the first to that valuation. Now, before I do, I actually think some of these companies might be $1 trillion companies already if they were in the public markets. Since they're private, they're not as liquid. There can't be as much irrationality, but when we've seen some companies go public from being private, CoreWeave and Circle, for example, their private valuations were fairly low, and when they got into the public markets, they exploded. So there does seem to be a public market premium right now for some of these technologies because of the lack of availability of all the other companies that are private. So I do think if some of these companies were public right now, we would see trillion-dollar valuations on them, but they're not, and I think that's a good thing. We don't want to see irrational exuberance again in the public markets because that's ultimately going to lead to a crash at some point. I'm pro IPO. I want these companies to be public so we can get them into our index funds, or if you want to invest individually, public markets are more liquid. There are millions more investors who have access to the public markets, and there's a good chance that some of these will become a trillion-dollar company, according to the Economist article, and just according to the trends and where things are headed and some of this price action we're seeing. So let's go to my list of top 5 potential Teracorns or private companies worth $1 trillion or more market valuation or market cap in the private markets. And just a quick caveat, this is for fun. If you have any thoughts of companies that will be Teracorns maybe in the next 5 years that are private, put them in the comments below and let me know what you think of the 5 that I'm going to give you today. If you agree, disagree, or if you think this is kind of stupid to even be talking about this right now. Unfortunately, I don't think it is. I think with the economists talking about it and these companies growing so fast, it could be around the corner as long as the public markets maintain their growth trajectory or at least some stability. If the economy falls into a recession in 2025, which is possible, or if politics gets in the way or geopolitical problems, we could see the valuations of a lot of these companies fall, and this potential threshold or this potential milestone for valuations could be years away. First on my list, and this is the one that was mentioned in the Economist article, is OpenAI. OpenAI launched the whole AI frenzy when it launched ChatGPT back in late 2022. That was a pivotal moment for technology. You think back to the dot-com boom, and then social media, and then mobile, and now AI. These are these really overarching technology trends that are mostly digital. And when they're digital, they're very scalable and can grow very, very fast. When ChatGPT was released, it kind of seemed like none of these other companies were expecting that. They all came around and built their own chatbots. We got Mistral. Google's Gemini can do the same thing. Anthropic's Claude is out there. So lots of companies can do this, but ChatGPT and OpenAI were the first movers, and they're already bringing in about $10 billion in revenue per year. That's annual recurring revenue. I'm recording this in mid-July, and just looking at Caplight, I'm sharing my screen here. The last primary round was March 2025. Estimated valuation was about $300 billion in that fundraise. We know SoftBank put up a lot of money, and they talked about adding something like $40 billion to help fund the growth of OpenAI. Caplight's marketplace price estimated about $305 billion. And though $300 billion may seem like a far off number from $1 trillion, OpenAI was worth $27 billion just in 2023, in early 2023. So in 2.5 years, they've gone from a $27 billion valuation to a $300 billion valuation. That's incredible growth. So at $10 billion recurring annual revenue, being worth $300 billion, OpenAI is projected, it says the company projects $12.7 billion in revenue for the end of 2025. OpenAI's internal targets project $29.4 billion revenue in 2026 and an ambitious $125 billion in 2029, or for 2030, the target raises to $174 billion. So their own internal revenue projections, almost 3x just between now and the end of 2026. So if you add 3x to the valuation, you're already at a $900 billion valuation. According to their own internal projections, OpenAI could be close to $1 trillion company next year. We need to be skeptical of projections. A company says it's going to make $30 billion in revenue next year. I'd like to see some numbers. We'd all like to see some numbers on that, but that's where they are. Whether or not they hit those projections, we'll see. But with this kind of growth, it seems very conceivable that this company is going to hit $1 trillion valuation sooner than later. If they were to be a public company, I do think that this would be $1 trillion company today. I think enough people know about the brand name and use it and want to invest in it. I think OpenAI is in the top 3 or top 5 for sure list of companies that could hit that $1 trillion valuation mark. Number 2 on the list is ByteDance. And ByteDance is already a $300 billion company. ByteDance, of course, the Chinese company behind TikTok, but they are not a one-trick pony. That's how we know ByteDance. But they also have a platform called Douyin in China, which is the TikTok equivalent in China. They have a news aggregator website. They have CapCut, which is a popular mobile phone video editing app. They have a YouTube-style website in China, and they also have a search business. The last valuation that I have listed here from Caplet, I'm sharing my screen. The last primary round was March 2025. There was a tender offer at about a $312 billion valuation. Caplet estimates about a $316 billion valuation as of mid-July 2025. Now, the reason why I think this one could really explode higher is there's this active bidding war that's being led by the President of the United States. I don't want to get into the whole thing, but you have several conglomerates in the U.S. who are trying to put together bids to buy TikTok from ByteDance. There are some other stipulations with this. It's a national security issue, and the president keeps delaying this ban that's supposed to go on TikTok. I think China's just playing really hard to get, and they don't want to sell this thing. It's a cash cow. It's a great business, a great Chinese-born business. They don't want to get rid of it. And so from what I've read is that there are several U.S. companies bidding for majority ownership of TikTok, and that China would try to maintain a pretty good chunk of it, maybe up to 49% of the ownership. But through this bidding war, and whenever it finally ends, we could find a brand new valuation that really raises the price of this company. The fact that they keep pushing it off and no deal is getting done, it tells me that this is too expensive and companies either can't make the bid or they need to find new partners or they're not willing to bid up for it. But when you think about social media companies in the United States, especially Facebook, if you want to slap a valuation on Instagram or Facebook.com, I don't know what it is, but it's conceivable that the influence that Instagram has adds almost $1 trillion to the valuation of Meta, or even if it's a few $100 billion of valuation that adds to Meta, ByteDance with TikTok and its valuation combined with their other businesses, it's conceivable that this is $1 trillion company or is going to be $1 trillion private company in the near future. We'll have to wait and see what happens with all these companies trying to buy TikTok. Hasn't happened yet and doesn't seem to be going well. If I were China, I'd be pushing hard to keep this thing and really driving that price up. This is a one-time opportunity to sell a valuable asset that has a lot of growth potential. It's hard to break into the US market from anywhere in the world, let alone China. So this thing could be worth $1 trillion soon. So we'll keep an eye on ByteDance. Number 3 on the list is xAI. xAI has a lot going for it right now. It has, first of all, the Elon effect. Elon started this business, spun it up, and suddenly they're talking about this thing trying to raise money at a $200 billion valuation. Just a few months ago, they were raising at a $113 billion valuation, or they're doing a tender offer there. That went to $120 billion valuation, and now we're getting reports of a $200 billion valuation in an upcoming fundraise. xAI has the AI hype cycle behind it, and it has a social media component with Twitter, or the former Twitter, now X, having acquired that business. Now, I don't think that business is worth anywhere near $44 billion, whatever they paid for it. But if Elon can work his magic, people just believe in this guy and would invest in him. If xAI was a public company, I think public investors would pile in just like they did with Tesla. An article came out just this week that said Elon Musk's xAI seeks up to a $200 billion valuation. That came from the Financial Times. And they just closed a deal on July 1st that raised $10 billion in debt and equity. And there was an article on June 2nd, xAI seeks a $113 billion valuation. This company is growing really fast. He really spun this up at the end of December 2023. I remember this being about a $6 million valuation around January 2023. In April 2024, it was at an $18 billion valuation. So we're talking about 15 months ago, this was an $18 billion company. It's 10x from there, if indeed this is true, that xAI is raising at a $200 billion valuation. Grok is a great tool. It's an LLM, just like OpenAI's and Claude's. And these LLM companies are all just resorting to bragging that their model is the best. But when it comes down to it, the average user like you and me, they all kind of work the same. We might have our preferences in how they deliver information, or whichever one we can use for free is the one we use. But there are a lot of LLMs now, and it's possible that it's getting commoditized. So first mover, OpenAI is a big deal, but the Elon factor in Grok under xAI is another factor that's worth considering. So xAI went from an $18 billion company in 2024, 10x in just 15 months or so. If it continues on that trajectory, or if it were to go public, big question though, is the economy going to continue at this trajectory? Is AI going to keep growing the way it is? How long can that hype cycle last? Can xAI get to $1 trillion company? Hard to know right now, but certainly in the top 5 list in terms of investor demand for this company, in terms of the technology. And that Elon factor probably adds at least $100 billion, and it possibly could add a lot more in the coming years. So xAI, number 3 on our list of potential Teracorns or $1 trillion private companies. Next up on our list, number 4, is another AI LLM that's growing very fast, and that's Anthropic. I'm looking at Caplight right now, and the last primary funding round was in March 2025. A few of them raised money in March 2025. At a $61.5 billion valuation, Caplight Marketplace right now, mid-July, estimating the valuation about $108 billion for Anthropic. Anthropic grew from a $1 billion annual recurring revenue company in December 2024 to a $4 billion annual recurring revenue company this summer, June, July timeframe. We also got an article from Bloomberg, Kate Clark, on just July 16th that said Anthropic draws investor interest at more than $100 billion valuation. That matches what we're seeing in Caplight, the secondary marketplaces. So that was just March 2025. It was worth $60 billion. It's now almost doubled just in a few months from March to July. We're seeing accelerated revenue growth. In February of 2025, we got an article from The Information that said Anthropic's internal projections are saying that they expect revenue to hit $34.5 billion in 2027, just 2 years from now. And so with annual recurring revenue right now at $4 billion and then projecting up to $34 billion, that's an 8x increase in revenue between now and 2027. So if you add an 8x multiplier to the valuation today, that takes you to $800 billion valuation. It's just simple math. If this is true about these internal projections, presumably they're putting together some long-term projections and taking those to venture capital investors and showing a path to how they're going to reach that $34 billion in revenue. And so while that $1 trillion number seems far-fetched, these numbers, if they're true, they make sense, right? You're just adding a multiplier to the current valuation. And again, that's as a private company. If you throw these numbers out into the public, it's going to be like a bunch of piranhas out there. Like, that's incredible growth. And public investors are going to want to eat that up. And so institutional investors and quants and individual investors and the mutual funds and the ETFs. So Anthropic, at the beginning of the year 2025, I wouldn't have thought this to be a potential $1 trillion company. But then throwing out those projections in February and now looking at a $100 billion company, $1 trillion is conceivable. Likely? I don't know. I'd like to see it in the public markets, have an IPO, and let the public markets decide if those numbers are true, if they can actually bring in that kind of revenue. I'm a little skeptical. I think it's going to be hard to grab that much market share from any of these companies, to be grabbing that much market share, and then the cost to bring in that revenue, we still don't know what that is. There's a lot of unknowns. But Anthropic still makes our list, number 4 on the top 5 potential Teracorns. Last on the list, and probably the one that you've all been waiting for, is SpaceX. Just this month, July 2025, SpaceX is doing a share sale, a tender offer at a $400 billion valuation. That makes it the largest private company in the world. And I'm sharing my screen. Caplight supports that as well. SpaceX has been chugging along, growing its valuation. SpaceX is doing these tender offers every 6 months or so, and that's providing liquidity to employees and early investors. It's allowing them to bring in new investors. And there are different layers of SPVs, of people who can invest in this company. And so if you're investing in SpaceX or trying to, be very careful about how you do that. There's a lot of ambiguity, at least from the public perspective. Over time, I do think that SpaceX is going to get to that $1 trillion valuation, and we'd love to see it go public. But as I've written about and talked about many times, and Elon has said, that it's more likely that Starlink will be spun off of SpaceX. And that would take the cash cow out of the business, and then SpaceX would stay private and try to go to Mars. But when Starlink is fully deployed and providing internet access to the world, there's a good chance it's worth $1 trillion or more. They're talking about going to Mars during the next window, which is going to come in the next 2 years. If they're going to be sending spaceships to Mars, how much money is that going to suck up and take away from the valuation of SpaceX? And what business is in going to Mars? I don't really see a profitable business going to Mars. It's cool for humanity and all that, right? Starlink is investable from a public markets perspective, because there's a business, there's cash flow, there's metrics that analysts can follow. But SpaceX as a public entity is definitely more challenging. Yeah, there's other space economy businesses that could explode in the next couple decades, and SpaceX is by far the leader in that. But that economy is not developed so much. But I think more than any of these other companies, if SpaceX as an entity or a Starlink were public, were out there in the public markets, that investors would pile in. Investors of all kinds would pile in, and this would easily be a trillion-dollar company if it were public. And maybe that's a good thing that it's not public, so that a more down-to-earth valuation is in place so that things don't get crazy. But none of this stops the demand for people wanting to invest in the company. When it comes to SpaceX, it's probably the number one company that ordinary investors would love to invest in. It's got that Elon premium. It's got that optimism premium for humanity. And that's why I think it could be the first potential trillion-dollar private company. Let's move on to IPO Radar news. This is when I talk about the latest news in the startup world and venture capital world. And ultimately, we're looking for the next IPO candidates. When I write about these on my website, I'm writing about them because I want them to IPO and I want to be ready for them to IPO. And so a big part of that is following their path while they're private companies through their series funding rounds from venture capital investors. First thing I want to talk about is not a specific news story, but it's about the talent competition that's happening in the AI space right now. So from a technical perspective, in the universe of these AI companies around the world, many of whom are just flush with billions of dollars of cash because private investors are piling in, there's only so many people, so many humans that can make this happen. I'm guessing it's somewhere under 1,000 of these people in the world, who maybe even under 100, who really understand these models and how to build them, and developers that can do it. Then you need leaders and managers who understand the technology and can motivate developers and can build the infrastructure required for this to work. So in this crazy world of LLMs, there's this crazy hunt for talent. Meta has been in the news trying to poach employees and is doing a pretty good job of it. Some reports indicate they're offering up to $100 million to hire certain talent away from various companies. OpenAI, certainly vulnerable to poaching. Anthropic. And when you've got Meta with their money, which is coming from social media and the public markets, they've got a lot of money to throw out there. And we saw that with Scale AI. They essentially took over half of Scale AI. They hired away their CEO, who's this visionary in AI leadership. There's a recent story about Meta hiring 2 Apple AI researchers. There's a guy named Daniel Gross, who Zuckerberg poached from Safe Superintelligence. This is another one of these AI startups that's raising tons of money and building something that we don't know about yet, a future product. So all of this is not that interesting to me, to be honest. There's people in Silicon Valley shuffling around trying to get the most money and the most stock equity as they can, getting poached by Mag 7s. Really just sounds like a drama story out of Silicon Valley. I don't live there. I live in Virginia. In those circles, it must be a really big deal that all these employees are shuffling around and you got the Mag 7 money chasing them. From my view, I think this is more about the AI hype cycle, this frenzy that's happening. And with this race to the trillion-dollar valuation, there's certainly some frothiness that could be happening. As long as the trend continues, it's going to keep going. And so these people, hey, that's great for them. Cash in, get as much money as you can, and get out of there when the market crashes or when things don't go well. Because as much as we believe in this AI future and all these important things happening and how it's going to change work and how it's going to change humanity and how it's going to change research and science and math and everything, this talent hunt for these very few people who know how to do this is just another sign that it is getting frothy and that maybe things could pop before these companies get to a trillion-dollar valuation. So if you're in that space, maybe this is interesting to you. For me, it's more of just a sign of the times that if Meta and Zuck are putting that much money toward this, that it could be getting a little bit bubbly. Remember, just a few years ago, Facebook changed its name to Meta because he was trying to build the metaverse, which who's talking about metaverse now? The hot topic now is AI, and Zuck and Google and even Apple now are talking about how can they participate in this economy and how can they remain leaders. Microsoft is in there too. How can they all maintain their leadership and position themselves for the growth of this tremendous technology? And the only way you can do that is with people. Even though they keep saying that AI is going to replace all these humans, you really need those puppet masters who are going to make this stuff happen. AGI, superintelligence, isn't going to happen with just computers. You need humans behind it. One last story I want to talk about today is sort of an update on Cerebras. Cerebras is a chip company that's supposed to be competing with NVIDIA. They filed for an IPO in September 2024. It went under government review in in late March of 2025. That review completed, and they seem to have the green light to move forward with their IPO. The tariff announcement happened, the market crashed, markets come back, and so we're all waiting for this Cerebras news. What's going to happen to this company? And one of the risks in the S1 filing was that there was customer concentration risk, that one of their investors was also one of their largest customers. They were based in the UAE, and so investors really wanted to see some diversification of revenue and of their business for Cerebras to go public. And I've mentioned this a few times over the past few months that Cerebras really needs to diversify its business. So we got this article, came out from the Newswire, that Cerebras partners with Hugging Face, DataRobot, and Docker to bring the world's fastest inference to AI developers and agents. So there was a summit in Paris that Cerebras announced these new partnerships, and it all came out in this one press release. And I found this interesting because Hugging Face is also on our IPO radar list, as is DataRobot. It's kind of rare that I see one very popular IPO radar company like Cerebras partner with two other IPO radar companies. Hugging Face is a collaboration platform for AI communities for machine learning. It's open source. Several journalists have dubbed it the GitHub of AI. So it's a very popular name. I wouldn't call it a darling of the AI world, but Hugging Face definitely gets a lot of press coverage out there. It's one that we're following on its path to hopefully an IPO someday. And this other company, DataRobot, is a predictive analytics company, business intelligence, machine learning, all the buzzwords you would expect. This was a $6 billion company at one point, DataRobot. It's now a $500 million company. The value has really fallen since the 2021 frenzy. It just hasn't lived up to its potential, and it got caught up in that 2021 frenzy. Hugging Face last valued about $4.5 billion. That's getting a little stale, so we could see a funding round from Hugging Face. So frankly, I don't understand some of the technical terms in this press release about what they're doing. I know that Cerebras, their focus is on chips and inference, which is the speed at which AI can respond. So these chips increase the speed of inference. And so in an AI future, when we're talking and using video for AI with robots or whatever, you need to have fast inference. And Cerebras has claimed it's one of the top performers in this inference space. And so with this press release, I'm really just seeing Cerebras saying to the public is, hey, we are diversifying our business. We're building partnerships to sell more chips to more diversified customers. Because that was the number one criticism of its S1 filing. So when people ask me, when is Cerebras going to IPO? And I don't know anymore because they stopped moving forward with their filing and they haven't said anything. But when people ask me, I say, well, they're working on diversifying their business and they need to be able to update their S1 with more revenue sources and getting away from that risk that people saw in that S1, that there was national security risk and customer concentration risk. So Cerebras, with this press release, coming out and saying, hey, we're really working hard to diversify our business. Here's some very strong partners that we're going to work with. And if you remember a few episodes ago, we talked about Cerebras, their CEO went on CNBC and said that he's aspiring to IPO in 2025, which didn't really rub me the right way. It's still on our list of upcoming IPOs for 2025. And I do think that if Cerebras went public, while NVIDIA is now a $4 trillion company, this is really the sweet spot for them. If they want to raise money and get public, now's the time. But I think they feel like they need to diversify their business first, so that investors are more comfortable investing in this company, which would, of course, then raise their valuation in the private markets, raise their valuation in the public markets. Now, because of this IPO delay, there's been a very active secondary market for Cerebras shares. I've seen recent offerings at about a $7 billion valuation. Looking at Caplight and looking at Hive, valuation is closer to about $5 billion right now. It's unclear how much due diligence you can get as a private investor for this company, but what we have is that S1, but we'd love to see an updated S1 and Cerebras to say, hey, we're moving forward. Let's do this IPO and let's get out of this private market so that we can get a true value on our business. But in terms of the hype for this company, it's still very strong. A lot of people have a lot of interest in this company, and you would hope that they're still going to pursue that IPO. CEO said 2025, but we're not sure yet. A lot of unknowns right now. So it almost seems like a PR campaign at this point that they're announcing these partnerships. There's probably more to come. Big question is, are they going to get any revenue from these partnerships? That's all for the show today. If you like what you're seeing here, please hit that subscribe button or that follow button or like wherever you consume your podcasts or your videos. I'm on YouTube, I'm on Spotify, and everywhere else. I appreciate those 5-star reviews as well. A 5-star review is really easy to give. You just tap the star on Spotify, tap 5. Same thing with Apple. You don't even need to write a review. You just hit that star. And it helps me grow the show. It helps me get in front of more people. Go to accessipos.com. Sign up for my free newsletter. It comes out Sundays at 10 a.m. It gives you a summary of the podcast. If you don't have time to listen to a 30-minute podcast or 20-minute podcast or whatever it is, you can just read the newsletter and it'll tell you what it's about. And if you want to click into a certain part of the video, you can do that there. I also include some IPO Radar stories of the week that come out after I record the podcast. I'm usually recording this Thursday or Friday, and so sometimes late Friday, you get some news stories. I put those into the IPO Radar section of the email. I also write about a new company every week. I add it to the radar list. So you learn about which company that is every single week, Sunday morning. It's free, unsubscribe anytime. And last but not least, join the Access Club. That's our Patreon membership group. I highlight deal alerts that happen in the pre-IPO marketplaces. I go a little deeper into IPO investing strategies, especially when IPOs are coming down the pipeline. Figma is the next one. I have a strategy post in there. You can learn how I'm investing in the Figma IPO. We're expecting a lot more IPOs to happen this fall. So that's where we'll be talking about our allocations and what brokers are offering shares to each IPO. So join the Access Club. It's just $5 at that baseline membership. We'd love to have you in our community. And a shout out to all the Access Club community members. Thanks for being a part of it, and thanks for making it what it is today. That's all for the show today. Thanks for watching. Thanks for listening, and I'll see you next week. This video is not a recommendation to buy or sell any startups mentioned. Pre-IPO and IPO investing involves significant risk. Conduct due diligence by reading the SEC S1 filings before participating in IPOs. Do not invest in IPOs with money you cannot afford to lose. Thanks for watching.